All right, part two of our lessons from a drawdown and how to bounce back. So, this is the more fun video where we take a look at the winning trades that we took after a 12% drawdown. As you could see here, ended the account on a high note and currently sitting just shy of all time highs at 23,100. But just as a recap to our previous video lesson, I think that one is more important than watching this one. You learn more from losing trades than you learn from winning trades. I've been doing this for a decade. All of my trading rules have come from losses, not gains. So just to zoom out, bounced back over a 2 day period, 6 trades, 2,200 in gains, and 15% overall gain on the account. So just before we dig into each trade, after any drawdown or even when you're running hot, like you have a bunch of gains, when in doubt, zoom out. It's a very simple expression, but it holds true in trading and in life. Review the mistakes you made and don't repeat them. So once I closed out these 8 trades and had a really ugly drawdown, I took the afternoon off, took the evening off, kind of get away from markets, get away from numbers, reset your emotions. And ultimately what I like to do then is just find high conviction risk versus reward trades. You can't get down on yourself that, oh shit, I lost on 8 trades, that means I'm not a good trader. Every trader, every investor has drawdowns. It's how you bounce back. That's what sets good traders from average traders apart. You know how to come back from losses. You're not chasing gains. You're not oversizing positions. It's default return to the mean. The mean is a profitable trader, and follow the rules and lessons that made you a profitable trader, and everything will take care of itself. So, find those high conviction setups. Don't chase, don't oversize a position, don't get emotional of, oh shit, I lost 2 grand, I need to make it all up on this next trade. That is not what we did here. We focused on managing risk first and foremost, because this 12% drawdown can get a lot uglier with 4, 5, 6 more losing trades. And it can get even worse, like my Keel trade where I lost 8%, my MSO's trade where I lost 7%, where a drawdown can continue as opposed to ending if you get emotional. So, really remove emotions, believe in your strategy, believe in yourself, and everything will take care of itself. So the first trade we took, just as like the broader theme on these trades, it was all dip buying winners off of long-term moving averages. So we've covered moving averages in previous video lessons. It's all about, finding the long-term average price a stock was trading at for a period of time. So this MSO's trades is the less sexy one of the bunch, but we're going to highlight it first. I call this one, it's good to see the ball go through the net. Think of it like a basketball player. It's like, eight in a row that you missed, and then you finally get one that hits. So MSOs, we got caught up in this wash here. Now, zooming out, this is the 200-day moving average for MSOs, this purple line that turns blue. So I know that there's a long-term support there. There's buyers. We saw it hold up for a few days. Really couldn't continue the move beyond the 460s, but that's okay. The justification of the buy was we're going to continue holding the rescheduling pump, which was around 436. Happens to be the 200-day moving average as well. I went long here with 880 shares at 439. So I nearly bought the 200. Zooming out to like a 5-day time frame, we went long right in here, and we got a nice easy bounce up to the 450s. I cut this. I thought maybe we'd go beyond the 450s, closer to this 471 retest. That ultimately wasn't the case, so I cut the trade. Walked away with just a small $100 gain, but it's confidence. You just see one go through the net, okay, on to the next one. The next trade we took was iron. This we got long at 47, we sold at 52. sold too early at 52, but that's not the important part. It's consistent gains. As you'll see, the theme repeats itself. This was a 100-day moving average buy and add. So let's take a look here at the 1-day daily. This is the 200-day moving average. Again, long-term support. This level has been tested back at the end of April, rallied huge all the way to 65. At time of recording, iron's trading at $60 in Germany, so tough sell. But let's have a look at what informed the buy. We took our loss on iron at 52 as part of the drawdown, and as you can see, the stock went all the way down to 46. And that's right where the 200-day moving average was. So I was buying this in blocks for the bounce. I didn't want to, part of me wanted to just, buy a bunch down here at 46, but, the stock could very easily go the other direction and those losses start adding up. So we bought in at 46. We averaged up on our cost basis all the way up to 47.83. So that kind of mutes the percent gain a little bit, but the initial entry was right in here. We did good with letting winners ride. Wednesday, great move all the way up to the $53 level. I got out at 52. This was a 150 share position, so about $6,000, 30% of the account. And when I'm coming off of a drawdown like this, I like to book the gains. I want to get the account back green. I want, all of you guys to make money at the end of the day. So there was a good gain on the table. We took it. We moved on to the next one. All of these buys were at the same time. So CoreWeave, another Neo Cloud, same exact sector. We got long the long-term moving average here as well. So let's take a look here at the CoreWeave chart. This was a 100-day, not a 200-day buy. So again, same theme here. We didn't trade this one as part of the drawdown. It was on watch, but you could see stock was up at 138, drag all the way down to 94. So I waited for kind of this green, it's called a hammer candle, which usually signifies a reversal. And that's exactly what we got. So, looking at this CoreWeave setup, we big drawdown, 100-day test and bounce. Now let's look at the iron setup. Exactly the same thing. 65 all the way down to 46. Iron happened to bounce a lot better. But again, those two buys, exactly the same moving average, exactly the same thesis. And then MSOs, this is showing a 100. I bought off the 200. And you see again, exact same pattern. I didn't get the move above 471 that I wanted, but nonetheless, a winning trade. So, just going back to broader lessons, it's step away from the screen, remove emotions, come back to your strategy. I liked it buying winners at previous support levels and playing them for 10 to 15% bounce. I focused on high conviction risk reward trades. I didn't chase, I didn't oversize the positions. I just focused on what strategy did I use to get up 40%. And we're not deviating from that. We're, simply going back to what's been working. The reason for the drawdown was me not following rules. So, just like a kid, when they touch a stove and it's hot, you burn your hand. And I burnt my hand for a few days. But, again, just return to the mean. Keel, we finally caught it after I lost twice on the trade. Keel was our big winner of the week. This was a 16% gain. So I made like 800 to I think I made $1,000 collectively on Keel. And then I took a 450 call position with small position size for 144% gain. So I got out of the equity at 465. Then I had this call, which basically made up for selling early. I kind of call it just how MSOs was nice seeing one go through the net. That keel call was sort of the cherry on top where, hey, I could have a drawdown like this, but at the end of the week, my numbers look like this. So a little stylistic trade to show you guys kind of my bag of tricks and what's to come with the strategy. This was a simple options trade. I got long at 9 cents. I sold it at 22. I made 150% on the trade in a day. And these are the gains these are the type of trades and the gains that are going to help the account go from 25,000 to 50,000 a lot quicker. There's certainly a lot more risk on these trades, but more to come on options trading in a new video lesson. But let's have a look here at the keel trade. So we'll start on the daily. This was the 18th, the wash that we were a part of. Stock came down to 489, just continuing to hold that level. When in doubt, zoom out. Where do we see 390s again? All the way back last fall. So this level, we've previously bounced off this level all the way up to the 480s. So this is literally the identical setup. We had like the washout here, focusing on November, the bounce here. Now let's look here. Same exact price, same exact bounce. All these patterns are repeated. Trading is all about spotting patterns and profiting off patterns, but this keel one is kind of crazy where in October it literally made the exact same move we saw here. As mentioned, I'm a big long on keel. I got long in this kind of $3.80, $4 level. I have a very big long-term position. So part of the mistake that I made in the drawdown is I just fell in love with keel and was being undisciplined with my entries on the trading account positions. But we got long at $4. So that was a key level to see us break ahead. I got long on the 19th. So we got washed out here. We tested 399. I waited on the 19th to see how low we got. We went to the 380s briefly. And as you could see, a big subsequent bounce to new highs. Taking a look here at like a shorter term time frame. This was Monday when we sold and took our loss on keel. We saw new lows get put in, and very quickly we got above 4. So my plan all along was if I saw strong support below $4, I was rebuying. I had a total of 1,400 shares. So again, smaller position size from earlier in the week when I was long 2,500 shares, 42% size. Everything in trading is about managing risk and not chasing gains. So I made mistakes chasing gains with oversized positions. Here we went back to just conservative position sizing and let winners ride. So we broke above 4, closed up around 420. So we were only up 5% on the trade. We let things work on Wednesday, just continued consolidating in that same range. Stayed long. There was no reason to sell. I mentioned in the Discord that I was a buyer on Wednesday, not a seller. I actually tried to add size to keel around like 420 for the move we ended up getting on Thursday. So part of my strategy is like, okay, this trade's working. I'm up 5%. I think it can go higher. So I'll double my position size to get the meat of the move. So unfortunately on Wednesday we didn't get the breakout, so I sold my additional 1,000 shares for break even. I didn't include it in this trade summary because it literally was a break even trade. And then as you see on Thursday, boom, we got the breakout. And that's where we sold at 464, the core of our position. And I took gains on the way up. I sold 400 at 430. That was a 7.5% win. a 16% win, and a 150% win, back to back to back on the same ticker. So, really good end to the week, and, really clearly see this is what happens when you stick to your rules, you're disciplined, and you're managing risk. Making 15% in 2 days is great, and any trader and any investor would take that. And the drawdown, it's a part of the game. You can't start trading scared with too small of positions, and you can't be trading to make up those gains, taking too large of positions, because the losses magnify. So as you see here, the drawdown was 12%, but it required 15% to get back into the green. So as your overall brokerage account value is going down, you need larger percent winners to get back to even. So this is where 90% of traders lose money, is your drawdown of 10, 15%, you now need to make 20% to be back in the green. So this is why I'm so big on managing losses and cutting them quickly, is there's always another trade, there's always another setup. Keel ended up running to $5. It could have easily dumped down to $4.20. We lock in our profits, we move on to the next trade. I'm 100% cash over the weekend. It's looking like markets are going to rip higher, but nonetheless, it's lessons that we took from our losses. Never average down, manage the weekend risk. I get to start the week with 100% cash, account at all-time highs, and I have my eyes set on getting to that 25K mark in the next week or two. And it's also, just goes to show a $15,000 account, I'm making $5,000 a month, taking very small sizes, leading by example. And here's like an individual account that I have. This was $6,500 that I put in. It's a cash account, and I just tailed summit.report trades from the bottom and made $1,000. So when I worked on my strategy, I had a 15K account and my core $50,000 account, and by copying the trades with the percent weighting, it works on 50,000, and I'm just showing again with another smaller account of $6,000, more in line with your guys' account size. You could see the same results. So here you see on a $6,000 account, I made $1,000 in 2 days. So it doesn't matter what your account size is. It matters that you're following a winning formula and a winning system that works. So I've proven that my strategy works on a 15K account, it works on a 6K account, it works on a $50,000 account, and I've done this before on a $250,000 account when I was a little bit more Cowboy Connor, but those days are behind me. But it really just goes to show, this is what happens when you don't follow rules. You take big drawdowns. This is what happens when you follow rules. You have steady, consistent gains. And, when in doubt, zoom out. Even with the really tough drawdown that I had early last week, I'm up 55% on 58 trades, 60% win rate. And let's see how the S&P 500 is doing the last month. S&P's up 4%. It's up 9% this year, so I'm up over 500% more than the S&P 500. Let's take a look at the NASDAQ. It's up 17% on the year. I'm up 55%. Let's take a look at Bitcoin. Bitcoin's down 11%. I'm up 50%. So my internal marker, my internal metric is outperform major indexes. I don't say I'm going to make you rich. I don't say you're going to retire your family trading stocks. I focus on 1 week at a time, one trade at a time. And sometimes the gains are slow, but at the end of the day, you zoom out. I'm, outperforming any index, any major asset class, gold, Bitcoin, NASDAQ, S&P, etc. And this is how I've made my living trading for over a decade. The strategy works no matter how small your account is, no matter how big your account is. Really just goes to show why you focus on percent allocation, and good things happen. So we'll look to keep the momentum rolling this week. I had a big internal goal of 25K before the rule change. So not going to force trades, not going to oversize positions. If we hit it, great. If we don't, great. This is a long play, but some really good lessons from last week, both on losers and on winners. And we'll keep things pumping next week.